How's everybody doing? We good? Any questions before we get started? Anybody have any questions? Any thoughts on the market? What it's doing? What you're seeing? How do I see the market? It's pretty volatile right now. It's definitely was on a charge. There seemed to be a lot of new money coming into the market. I think right now a lot of companies are warning about their next quarter, but that doesn't seem to bother anybody. There's still money pouring in. Also, um, there's the whole virus issue. Uh, Coronavirus doesn't seem to, you know, slow anything down in the market. It's quite amazing actually to see it charge forward. Last few days, it's had some trouble, but each time it's driven down, it's found a way to bring back those losses. Today it didn't quite make it back, uh, but it's phenomenal to see that there's still money pouring in into the market with the concerns globally going on. So I would say, excuse me. So what I'd say is volatility is what I see. A lot up and down. Depends on what you trade and how you trade. That could be a good thing or a bad thing depending on what you're trading. Uh, we've been talking about the Iron Condor as an option. Today I'm going to show you putting on how to put on an Iron Condor. That being said, you have to recognize that volatility is not your friend. It is your friend in that your options will be better, more valuable when you sell them, but you know the volatility, increased volatility, puts you know puts the likelihood of a loss a little higher than usual. But that's what you get by getting more for your actual trade. Does that make sense? Does everybody understand what I mean? So we're going to get better prices for our options when we sell them. But on the other end of that, it's because of the volatility. It's because the market doesn't seem to, it's come to a lull. It's not sure where it wants to go. Individual stocks are moving up, some are moving down. On whole, it's had quite the charge, but on whole, the last few days, it's flattening out. It's not quite made it to try to make that new high again. Nasdaq's doing well. S&P is below its high, and the Dow is, getting beat up a little bit. But we'll see what happens. We'll see what happens. I was just reading an article today that the FANG stocks make up 18% of the move in the market this year, and that hasn't been seen since the tech crash, early 2000. So it's something interesting to watch for sure. Trump will input a plan to help families invest in stocks. This should be good for bull markets. Yeah, that's right. If they do implement, or when they do implement a an option to benefit from investing in the stock market, that'll definitely create a possible influx of cash because of the tax benefits. Hey Nadia, how you doing? This is uh this is a stock class. Our class starts at 9, right? Nadia, can you hear me? Did you mean to come into the stock class? That's okay. That's okay. Yeah, ours is gonna start. Ours is gonna start at 9. No worries. No worries. No worries. I think if you hang around in this one, yeah, I think that would have been too confusing. If you hang around this one, it might be tough to understand. Um, but yeah, I mean, if you want to stick around, you can stick around. Okay, well, all right. We'll see you. Anyways, excuse me. So Yeah, that's right, John. If we see a tax break, which I think he's trying to do, he's trying to. It's an election year. He's trying to have the market as high as possible. Um, so we'll see what happens. So they'll likely try to push that through, uh, you know, as soon as possible. Mid-year, they want people to throw more money into the market. So the market itself, which creates a concern. These artificial growth in the market, accelerating that growth, creates the more concern that the crash is going to be harder. It's not going to be necessarily, you know, a, receding market that's a soft landing, they say. But we'll see. We'll see. Any other questions? But you're right on with that. Absolutely. Anybody else? Okay, so let's do something. Give me 1 second. Okay, so just a look. Let's take a look at the market itself right now. Okay, everybody see that okay? Okay, so what we're seeing, this is the S&P 500. This is a daily chart. So what we're seeing, there we go. Okay, so what we're seeing is you can see this drive up, pull back, up, pull back, up, pull back. So it's still technically, we're still, in an uptrend, right? There's still an uptrend here. It's looks normal. We should or possibly could see a pullback to this area here to come into that support. Everybody see that? You see that support? Um, you can see actually where it did that right here, came into support. So it went up, it stopped, pulled back, went up, pulled back, and it pulled back right into that support. And then it made a new high, and it came back. Now this pullback here was concerning because it didn't hold up here where you expect it to hold up, somewhere around here. When it broke that, that was a concern that maybe it's reversing, right? The trend's reversing, but we can see that it recovered, made a new high, had some resistance here, made a new high, and then it's pulled back. But you can see these dojis building up. Everybody remember dojis? Right? The dojis are indecision. Basically, the market went up, went down, and closed really close. These four dojis closed really close to where it opened, right? So that's kind of where what we're seeing in the market in the last few weeks. Uh, we'll see what happens with these changes. Any questions about that? Does everybody see that? Nice upward trend in the market. Um, so we'll have to see what happens, as they, you know, they look like they're looking for good news, but definitely still bullish. If we go to, a longer time frame, say weekly, you can see this is the weekly, right? You can see that trend. It's been going on for a while, right? This upward trend. Um, other than this double top and then pullback, which is pretty deep. This was a big, deep pullback. Yeah, it just basically recovered. Got some resistance here again. Pulled back, got another high, pulled back, double topped again, and then it just charged up. Just craziness. This insane kind of pull pull back. Sorry, that forward momentum that it's got is pretty amazing. So that's the market. Any questions? No questions? You guys hear me okay? Okay, good. Also, I've been talking to myself for the last few minutes. All right, so let's show you an iron condor. We have about 15 minutes left. Let me show it to you, just give you an idea what it looks like, and then we can talk about it. All right, so this is the Russell 2000. This is one of the preferred indexes to run the iron condor. You can see right here we have the Russell right there, the last 1683.71. There's the bid and the offer, the volatility and historical volatility. You don't need to worry about that right now. I just want to talk about, what is an iron condor? What are we doing? Now, we talked about this. An iron condor is what we're doing is we're going to the 10 delta. So write down these rules if you haven't already. I went through them again, but I'll talk again about them. So we want the closest 1 to 10, and we want to sell that one. And if you go to strategies, by the way, and you go to iron condor, it'll show us this here, but just so you see. So this is a 5-spot iron condor, right? We really would rather have 10, a gap of 10, but we'll look at that together. Okay, so iron condor, I'm looking for the 10 delta and the closest 1 to 10, which is that one, and I want to sell that one. Okay, now this already just put an iron condor together for us. We're not interested in this particular iron condor. Okay, because it's too tight for where the price is, right? So we're gonna get rid of that for a second. Okay. Okay, but you'll see the image there. Okay, so here we have the 9.5 delta and 11.3. So the 10, this is closest to 10. So we go over and we'd sell that option. So we're selling the 1760, and then we go 10 up and we buy it. Now, why are we doing that? Why are we buying it? We just sold the 1760 and we're buying the 1770. Who can tell me what that means? What are we saying? Remember that where the current one is. So I'll just show you. I'm going to show you a chart of the RUT. So here's the RUT, and we're going to go daily candles. Okay, so right now here's the RUT. 1683.71 is where it is. Okay, we're saying we're going to sell the 1760 put, and we're going to buy the 1770. Okay, does everybody understand what we're doing there? Anybody? Okay, so what we're saying here, okay, is we're buying the 1770. Selling the 1770. And my apologies, that was wrong. These are the calls. My apologies. These are not puts. These are calls. Here's the put side. My apologies. So we're buying the 1760 and we're selling the 1770. Okay. So what does that mean? It means that the stock, okay, if I put a line here, right, has to cross above this line, which is, let's assume 1760. Okay, 1760, for us to be at risk of losing money. Does everybody understand? We sold the put, right? You guys with me? Yeah, okay. All right, so we sold the put. Now, when we sell that put, the 1760 put, we also, what we do is we do 1770. So we're saying we'll take a loss anywhere between these two areas. We can take a loss, okay? But it has to go up from where it is now, 1683, in the next 30 days. It has to go up here, okay, and break through that, okay, for us to take a loss. Why we're buying the 1770 is we want to cap our loss. Do you remember we talked about defined and undefined risk? This is defined risk, right? There's a defined risk here, okay? We're assuring that we can't take a greater loss than the distance between these two minus what we're bringing in from the actual option, because it's going to be a credit, right? We sold for 225, say, and we bought for 170. So there's money in between here, right? Okay. So once we get that side, then we go to the other side. We go to the 10 delta over here, closest to 10, which is this one, and we do the same thing on the other side. So we sell the 1560 put, and we buy the 1550. Okay, and you see, look at the iron condor. See that? See that image? That's an iron condor. Everybody see that? That's what an iron condor looks like on a risk graph. Okay, so what that does is by combining those two, right, which on the other end, right, so we're at SEP 1560, so the stock has to go, or the index has to go below 1760, which is about there, and we'll take risk up to there. So as long as this stays between these lines, between these inner lines, we're fine. We're going to make money, okay? If it breaks through these lines, it can only break through one side, right? If it breaks through one of these sides, we'll make all the money up here, but we'll take a loss depending on how much it goes through. Like if it goes right through, we're going to take a loss, right? We're going to take the maximum loss. So the maximum loss for this, we're bringing in $1.44. Okay, we're bringing in $1.44. That's how much of a credit they're going to give us, $1.44. But does anybody know how much we're risking? Does anybody know how much we're risking? Anybody want to guess how much we're risking? Anybody? Okay, who's lost right now? It's okay if you are. Who's lost? You guys there? Okay, all right. You're lost. Okay, Vincent, all right. Henry, John, what are you guys thinking? You guys see what I'm doing? Can't do much with my phone. Oh, okay. Okay, so John, can you tell me what I'm risking? What my risk is? Numbers are a bit too small. Okay, let me do this. Let me close this up for a sec here. Okay, I'll do it on a whiteboard because I think that there's still a little confusion on this, which is okay. Okay, so the actual stock, the index is 1683, so call it 1684, okay, because it's almost 1684 is the actual price of it, okay. So what we're trying to do with this is we're saying, look, the stock is doing this, we're going to take a position here, and here, here, and here, okay, and we're going to believe that the stock is just going to stay in between these lines. Okay, does that make sense to everybody? Okay. All right. Okay. So Henry, you're right. It's $1,000. Okay, but why, Henry? Why is the risk $1,000? Now remember what we did. We did the 15. We did 15, 50. Sorry, 1560 and 1550. Okay. And on top, we did 1760 and 1770. Okay? Okay? That's right. The difference is $1,000. Yeah, is $1,000. So the difference between these two is $10, and the difference between these two is $10. Okay? But my max loss, and if you multiply that by 10, right? Because you have by 100, because you have 100 shares, right? How much is that? That's $1,000. Okay, Same on this side, right? If I multiply this by 100, I multiply that by 100, okay? That's going to give me $1,000 at risk, okay? All right? All right. So is everybody else good? So Jean, how you feeling? You good? Okay? And Vincent? Okay, good. So technically, if this is 30 days out, which is the one that we chose, you could go a little bit longer. 30 days out. What do we want this to do for the next 30 days? Is we want it to stay in this range. We just want it to stay in the range. Okay, that's what we want. As long as it stays in this range, we're fine. Now, if it goes up through there, okay, then we're going to take a loss on this side. But you can't lose on both sides, and your broker knows that. Okay, can't lose on both sides. You can only lose on one side. Okay, so it could go through the bottom or through the top. Okay, now if it goes through the top, okay, what is our max loss? Well, our max loss, if you remember when we looked at it, so the max loss, so your max loss, so your loss, max loss equals max risk, so max risk minus credit. Okay? Okay? So the max loss equals, max loss is 1,000. So you only lose on one side, minus, right, the $1.44 that we're going to get, okay, which is times 2. Sorry, times 10 again, times 100. So it's 100, this is 100 shares, right? So $144, right? So it's $144 equals how much? $856 is our max loss. Okay? Everybody see that? Everybody understand that? So we're risking 1,000 to make 144. $144. We're risking 1,000 to make 144. So we could lose 856. Now, when you look at that, it doesn't look too appealing. But the fact is, the probability of success is somewhere between, depending on exactly where we got it, but let's say 80 to 90% probability of success. You're closer to 90, but 80 to 90% probability, depending on exactly where we got the strikes. So 80% probability. So most times we're gonna make money. There are gonna be times though where we take losses, right? There are times where we take losses. Okay, so if we take losses, you got to take that into account, right? Obviously, we got to take that into account. But the idea of an iron condor is overall, you should be profitable over time. Okay, but this is again recognizing, you know, if the market crashes or goes on some rage of a bull run, you know, in your time period, you could take a loss. But overall, you know, it's you know, stocks have to come back when they go up, and they have to go, you know, up after going down. They don't just go down to zero as a rule, at least as a concept. I guess the market could go bankrupt at some point. That's possible. But the point is you're trying to take advantage of a sideways move, recognizing, and if you look at, you know, when we talk about the Russell, you know, the spots that we took at, you know, the last time it was, you know, at that spot was, let's see, November 5th, I think. Sorry, November. I gotta get on the right bar here. November 1st. It looks like it went down to 1552, so it's actually the day before. So October 31st was the last time that it went down to 1550 in that area. And the last time that it went to 770, 760, 770 was high was 1740. 1740. Wow, it's been a while. Weekly. Let's go weekly. Sorry guys, you can't see this. Only I can. Actually, looks like 1740. Well, all of last year wasn't there. I gotta go back further. Let me see if I can. Yeah, it's not been there forever, really. Looks like, yeah, hasn't been there forever. Maybe hasn't ever been there because that might even be a new high. The point is we're taking way far away from the actual price. So the actual price is 1683, but we're, on the high side, we're 1760, which is 80 points above, and on the bottom we are, looks like 1760, we're 15, so we're 120 below, 120, 130 below. So these are wide ranges, very wide ranges that you're doing and dealing with when you're dealing with this particular iron condor, right? So again, we're way up here. The stock is in here. We make money if it stays, it stays in this range, right? That's the key, right? If it stays, as long as it stays in this range, it could go up, it could go down, it could go up, as long as it stays between these ranges, it's fine. If it breaks through those ranges, that's where the risk comes. Excuse me. Okay, any questions? You know what? We're going to go through this again next week. I was going to ask you guys, do you think it'd be better to do this meeting just before our Wednesday meeting, real estate? Is that better for you guys time-wise, or would you like it on a separate day? I'm okay with this time right here. But we can do it if you all agree. We can do it tomorrow. We can start doing it on Wednesdays just before our real estate meeting. We'll do our real estate because our real estate meeting's at 9. We could still do this at 8. Is it better for you, John? Okay. Anybody else? Is it better or is it worse? You're down. Okay. Henry's good. Vincent, fine. Good. Better. Good. Henry. Okay. Good. Let's do that. Keith, you there? Keith, are you good? Are you better tomorrow? Just before our real estate meeting, because we have a real estate meeting at 9 on Wednesdays. So maybe better to do it on the same day for you guys. I mean, it's totally up to you. Okay, good. All right, so let's do this. So starting next week, we will run the meeting at 8 o'clock on Wednesdays, and that way, it's basically one night for instead of 2. Okay, so that way you can be on the real estate and the stock same night. Okay. All right. So I know this particular trade is pretty confusing, can be confusing. But what we'll do, Eastern, always Eastern. Yeah, Keith, always Eastern. So 8 Eastern and 9 Eastern is the real estate. Okay. So what we'll do, folks, is we'll run through this again. Yeah, we'll run through this again. Don't worry, we're going to run through it a lot. Okay, we'll run through it a lot. It can be a complex trade because we're just using options, right? No stock. And then from there, we'll implement a trade. Okay. All right. Any questions before we wrap up? Okay. If you're good, type in yes or Y. Good stuff. All right. I'll see you all tomorrow at 9 for real estate stock. The stock class is going to be next week. Okay. Next week at 8 o'clock. That's where it's going to be. Okay, folks. Have a great week. Write down any questions you have. We'll continue to work on the iron condor. Okay. Have a great rest of the week. I'll see you, most of you, I'm sure.